Remember all the banking problems with mortgages back in 2008? It's the last time we heard about bank failures until last week. Two California banks failed, and then just a few days ago, a major bank in Switzerland had to be bailed out. This morning, Treasury Secretary Janet Yellen told a Senate committee that the U.S. banking system is sound. That doesn't mean Americans aren't nervous about where they put their money. Investigative reporter Chris Horn wanted to find out what happened and what it means for people at local banks.
Stephanie, I sat down this morning with the head of TowneBank at their headquarters in Suffolk. We focused on Silicon Valley Bank. It failed last week after investing too heavily on what is normally a safe bet.
We don't ever like to see this. It reverberates throughout the entire industry whenever any single bank gets in trouble.
TowneBank's Billy Foster says he and his competition are paying close attention to what happened to Silicon Valley Bank. SVB failed last week after it had been in business for nearly 40 years. It catered to private equity firms and the people who invest in technology.
Whereas TowneBank and most other banks in the country really are well-diversified, broad bases of deposits, many different industries.
And for that reason, Foster says people do not need to worry about their money.
I really believe strongly that the banking system as a whole is very strong.
Ironically, Foster says SVB had invested heavily in what's typically a safe investment, government securities. When are they not safe? When interest rates are rising, as they have been in the past year.
As rates went up, they got caught with a $21 billion portfolio that was illiquid, and effectively when they sold it, eventually they recorded a multi-billion-dollar loss, and I think that's what kicked off the run on the bank.
The Federal Deposit Insurance Corporation has taken control of SVB. That agency normally puts a limit on bank deposits it will insure, $250,000 per customer.
In this case, FDIC came out and said, we're going to insure all deposits.
So the biggest losers here are not the depositors, but the people who invested in the bank itself. Now they have shares of stock that are worthless. That would include any SVB employees who have company stock in their 401ks. And perception can become reality when it comes to a bank in trouble. Customers sense something is wrong, so they rush to get their money out. Foster says social media accelerated that in the case of Silicon Valley Bank in that tight-knit tech community out in California. Chris Horn, 10 on your side.